Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Monday, October 16th, 2023. Before I click through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like the Apple report. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for at least 20% moves on those stocks, and you can check it all out for no cost whatsoever. We offer a 5-day free trial up front. So if you sign up for wickedstocks.com, you get 5 days to check out everything. And if you don't like what you see, you can cancel your subscription at no cost to you whatsoever. And I am going to get on with the charts now. Start with the big picture, work our way into the day itself. Just a reminder that we came off of, well, I could start back in May, actually. We settled above this significant channel top that is presently 165.91 to 167.32 all week. This is a weekly chart. Having settled above this formation back in May, did set up a long-term buy signal that I still think ultimately should yield 229.15 by this point next year or sooner. We fell back to this channel structure a few weeks ago. It held nicely, 165.91 to 167.32. If retested over the coming weeks, can absorb selling through the rest of the year and well into next. And as I say, above which 229.15 remains a longer-term objective. On the way up, we can and still are in reach of 188.83 over the next several weeks. This will be an important test as we move through November trade. If tested, can absorb buying on a weekly, possibly monthly basis. And from here, we could fall back into the upper 160s again within a matter of a month or two. We could fill this wedge out through the rest of the year. But if we close above 188.83 in the coming weeks, that sets up for a meaningful show of strength as we move into Q1, Q2 of next year. I would say possibly within 3 to 5 months of closing above 188.83, we could reach this 229.15 long-term channel top where an annual high can be made. But for right now, we're in this zone between 167.32 and 188.83, and it was about a week ago. Maybe a little more, 1, 2, 3, 4, 5, 6, a week and a day ago that we settled above this combination descending 1/3 speed line and channel top that is now 172.59 to 172.91. I've rounded down to the channel top at 172.59 that if tested over the coming days can absorb selling through next week, and from here we can round back up into the upper 180s within 2 to 3 to 5 weeks of testing the lower 170s. Now, whether or not we test 172.59 has everything to do with whether or not we close today below 178.53, which is this extreme channel top based on the same set of lows that we settled above last week. I think that was Wednesday. Thursday was a rally. Friday we gave it all back, but closed just above the 178.53 channel bottom. There's also a rising channel bottom at 179.01. I've reduced that to just a minor point. I just want to focus, hinge, if you will, off of 178.53, above which a stable dynamic continues for the day. 180.71 in reach. That is the high settlement price from Thursday, can contain intraday buying pressures, above which 182.91 is in reach today. I don't think I show that anywhere. I do not, but I can basically tell you that 182.91 is a 50% upside retracement from the extremes of the July high to the September low. So if we happen to push through Thursday's high settlement price of 180.71, then 182.91 is attainable today, where a daily high can be made. And if we were to close today above 182.91, then we should reach 185.49 within just another day or two. That is the beginning of a band of meaningful resistance up to 188.62, as I mentioned earlier, that can absorb buying possibly well into November. So, if I'm talking to the 2 to 3 week swing trader, you may have gone long a week and a half ago or so when we settled above this 172.59 formation. And if we break If we close below 178.53, you may cover that long position. Or if you want to take some heat to the downside, and I'm not suggesting it, I'm just saying, just know that if we close below 178.53, I have a 3 to 5 day sell signal into the lower 170s, 172.59. Until then, if you went long a week or so ago above 172.59, and we continue closing at or above 178.53, it is stay long for the anticipated target of 188.62 over the next week or two. And as I said a moment ago, if we close above 182.91, we could push into this area this week. So 178.53 is our downward pivot point. If we break or open below 178.53, 174.98 is likely today. That is a downside 50% retracement over the last couple of weeks, from that late September low to last week's high. 174.98, that may be it for the day. But if we break 174.98, just know we could, by the closing bell, actually test 172.59. So the day trade setup is bearish below 178.53, expecting at least 174.98. And if we close below 178.53, that is a 2 to 3, 3 to 5 day swing trade to the downside to 172.59, where 3 to 5 day swing traders can not only take profits, but also reverse and go long, as can 2 to 3, 3 to 5 week swing traders go long in anticipation of bullish rotation into the upper 180s. Upside, if we hold above 178.53, it is bottom picking for day traders. You could hold out for 180.71 or 182.91 today, where day traders can take profits and perhaps set a short. But just know that I'm constructive into later week above 178.53 and closing above 182.91. I would expect this upper area the next couple of days. I will talk about, and that's probably the last thing I will cover, the question obviously begs, will we fall back to this long-term support region over the next few weeks between 165.91 and 167.32? And the answer to that for me is yes, if over the coming week we happen to close back below this 172.59 area. We could actually bottom out here, as I've been saying, not only for a week, but even through November trade. And if we do close below 172.59, that does indeed set up for, wrong chart, a test of the 165.91 to 167.32 region. And that would likely be, let me pull that chart up. I don't think I show it. 165, 167. Yeah, that could be within just another 2 or 3 days. So, yes. I'm going to finish with this. If over the coming weeks we close below 165.91, that does set up a long-term sell signal. So rather than expecting longer-term bullish continuation above 167.32, it's 3 to 5 months bearish continuation below 165.91, anticipating then this 132.01 channel bottom where we could bottom out by that point in time, possibly well into 24. But we're nowhere near that. I don't expect that scenario unless we close below 165.91. I'm going to leave you with this chart, the most appropriate for the day. Please click like, share, subscribe, and check out wikistocks.com. I'll be back tomorrow with Tuesday's Apple report. You have a great day.